What's up, everybody? I'm Jared, the Stacking Surfer, and I'm excited to have you guys here on this live stream. If you're watching this for the first time, this channel, please hit that subscribe and that bell icon just down below. That's going to make sure you don't miss any of these videos that we're putting out. Put out a lot of videos, some shorts, as well as a lot of live streams with some great people that come on as guests, as well as some incredible subjects. And if you ask my audience, I hit things in a completely different way than just about any other stacker does. I combine a lot of what's going on with finance, banking, as well as gold and silver to help you guys get some kind of a unique spin on things, right? And then as using the name Stacking Surfer, there's a big spin on that. We're going to go catch the largest gold and silver wave that's ever been there in history, okay? That's what's happening right now. Plus, I like to surf when I can, and I live 10 minutes from the ocean, so there you go. All right, I'm going to bring our guest on here. This is John Thorman. We're going to refer to him as the coach too. And
That's right.
He is the president and CEO of Thorman Financial Group. And we've had him on a couple times so far. I think we met about 2 years ago, shortly after my channel started, and we were communicating back and forth on things.
Right.
And, you know, what's really interesting is to get a good understanding of how do precious metals, specifically silver, since we're going to be talking about that quite a bit today, but also gold, how can they fit into a retirement plan, or do they? So that's really the question we're going to try to answer here on this live stream today. Couple quick reminders for you guys. Since we did get over 100 thumbs up for the Miles Franklin live stream with Andy Sheckman on Tuesday, I'm going to do a silver giveaway. I don't actually know what this is. I got this off Whatnot, but it's a really cool little skull pour. And so we're going to be doing that. That's going to be our giveaway. And if we can get ourselves up to 50 likes on this live stream, I'm going to go ahead and add in another quarter proof. Look how shiny that is. So this is a 3/9 fine silver. This is not 90% silver when you get the proofs, the modern proofs. Well, it goes that way. Sorry, guys. So we're going to do that. But, talking about silver a little bit here and gold in general, they can be used for retirement because they are money. So you can always use them to barter with people, right? So, I might be able to go down to maybe someone's coming over to wash my car. And, I might have a silver quarter that I can give them. Okay, here it costs more than a silver quarter. Car washes are about $40. Whether you go to the car wash or whether they come to your house. Now, that's not just to wash the outside of the car. That's to basically get a detail of your car. So when they come to your house, they usually do a pretty darn good job. You're getting something that's worth a lot more than $40. When you go to the car wash, they kind of go over things very quickly. They don't do it real well. But, this Britannia right here, for example, I could trade in to have my car washed. Okay. It's about $40 right now. It's about a little over $38.50 today, somewhere around there. And it's got the king on it. So I really would not be that hard pressed to part with it. I'm not a big fan of the King of England, but this is money. So I could barter with it. The other thing I could do is go take it to an LCS and probably turn it in for, let's say, somewhere around like $35, $36 in cash. And I could use that to pay the car wash guy, right? So you can use gold and silver for retirement, but I think most people, John or Coach, that are stacking this stuff, right? So you have your investors that are buying like SLV paper silver, and they're trading it on a consistent basis, trying to make money. You have people that buy into the ETF because it's the way that they can do it with their 401k potentially, but more likely it's their IRAs that are self-directed. And then you can have people that decide to go buy mining stocks. Okay, so silver and gold mining companies, and those have been probably the most beat down sector in all of Wall Street until this year. They've kind of all picked up, and a lot of them have gone over 50% this year already. Then you move over to and those are your investors, people that are looking to get gains off of it. They're not holding it because they love gold and silver. They're holding it because it makes sense to them financially for the most part. And then you got the stackers, people like me. And here's another cool coin I just found to show you guys. It says Heretic. It's a 1.75 ounce 3/9 fine pure silver coin. So Then you got stackers that have coins like this, and I don't even know where this came from. I have no idea how I got this. And I have no idea how I got the Britannia either, guys. This is here too. But oh well, sometimes they disappear, and then other times you lose them in an unfortunate boating accident. So that can happen too. But the key is you're accumulating these things when you're making money, and then you're trying to figure out how to get into retirement stuff. So the reason I wanted to bring John on, guys, is there's a lot of I hear a lot of people in the community having to sell silver to pay for bills. Okay. Mm-hmm. I hear them having like a refrigerator breaks, or, the car needs a repair and they have to go sell, a couple gold coins to get a new car or whatever else. To me, gold and silver are there as savings, and they're there as part of my wealth. But what I really want to do, Coach, is I want to send these things to my family when I pass, is what I really want to do. I want to keep it in the family, keep it going. I can't give financial advice personally on the channel, and I'm only here saying this, but I've heard that a lot of wealthy people tend to lose all of their gold and silver in an unfortunate boating accident at the lake as it passes from generation to generation. Now, I'm not saying that's what you guys should do. You probably shouldn't go boating and with all your silver and gold.
With all your gold and silver, yeah, don't do that.
But I hear that's what happens for a lot of these families. So it is one thing that tends to happen, is a lot of boating accidents. But what I wanted to do, Coach, is talk a little bit about, in addition to silver, what are some of the other things we can do? And then how does silver kind of fit in this? So, if I've got these fun silver coins, and I go to sell them, I know I'm going to take a little bit of a loss on them unless I sell them retail, like on eBay or something, but there's still a fee. Uh-huh. And if I want to hold on to these, what are some of the other things that we can do that would potentially help us in retirement to create and generate cash flow? That's kind of one of the things I've got to look at now. I'm 48, I'll be 49 next month. Mm-hmm. And, I don't have a big, massive retirement account. Most of what I have has had to go into my house. And I've got some investing, but a lot of it's gone to medical bills and stuff that I've had to pay too. But, right. The Lord is good. We're always taken care of. We always have what we need. So I'm not worried about it. But as I do get extra money, I always have to think, do I go put it into silver, or do I put it into something else that might create more cash flow? Because this piece of silver won't create me any cash flow sitting in my, in my safe. So
that's right. And, when you're retired, wealth is measured in terms of cash flow, not net worth, right? Your standard of living is determined by your amount of cash flow and not your net worth. So cash flow is critical. And because we can't really get much yield or any yield for most people with the coins in their safes, we need something else to be working with, right? And on my financial game plan worksheet that I shared with you, Surfer, we go through this accumulation phase, right? Early on in our wealth building, as we're young and as we're aging, we're accumulating assets. And what we're doing, it's fascinating to me, is that we're taking a little bit of our cash flow every paycheck, let's say, and we're converting that into an asset, right? We're buying an asset. A little bit of cash flow into buying assets, month after month, year after year. We're in that accumulation phase. We get to Q2 in my game plan here, where we got to start protecting our assets. So we're de-risking, we're de-leveraging, and then we pull the trigger sometime in that retirement red zone where we stop working. We're no longer receiving active income. We're not getting a paycheck anymore. And now we have to rely on a paycheck coming from our assets or our pensions. And there's three types of pensions, right? You got the government pension, Social Security. You got your employer pension, which is a defined benefit program, which is going the way of the dodo bird, right? Not too many people have those anymore.
Yep.
Hard to find. But your third pension option is a personal pension. And you can go and take an asset, you can take cash and exchange it for a guaranteed monthly income for as long as you and your spouse live. That's the three kind of pensions. But we've got to look at when you pull that trigger, when you stop working, how are you going to generate cash flow? Because that's what you're going to live on. That's going to determine your standard of living. And now everything changes. It's like a 180 flip. You go now from taking a little bit of your assets and converting it back into cash flow. We've come full circle, right? We got to convert assets into cash flow. And what is the most efficient way for you to do that? That'll give you the greatest peace of mind and freedom so that you can enjoy your retirement, because there's been lots of retirement income research done. And what they have found is that the people that have a guaranteed monthly paycheck are happier and live longer, and they spend more money, so they are able to enjoy their retirement more than somebody who doesn't. So we got to look at how we can generate cash flow that will free you up and allow you to live your best life in your golden years.
And a funny thing I'll just throw out there. One of my friends, OC Stacker, that's on here. One of the ways he's earning, he's retired, and now he's been pulled back out of retirement, and he's basically getting a company off the ground. And the way he's been in retirement, he did an early retirement. He's been getting a bunch of free silver from all these YouTube channels.
Oh, really?
He's been doing it. So, there's a lot of these channels you can go to that do silver gauze. Like, we're going to do this gaw here in a few minutes, guys. This little
giveaway. Nice.
If we can get up to 50, we'll do another one. But, there's ways to earn a little bit of stuff here and there. We've got NIFAF and Triv mentioned if I've ever gone onto the beach and done a metal detector. I haven't, but I've interviewed someone. There is a video. If you go down into my videos, you'll see a metal detector one. But there's ways like that people can make a little bit extra here and there with gold and silver. But the key is it's still not going to produce you yield.
Right.
There is something I'm going to bring about hopefully next month to help people understand how they can get a 3% yield on gold, which is kind of a new thing that a lot of you guys don't know about. I've been using it now for about a year. And I think it's a good option. So it's one option I'm going to put out there, but I also like some diversification with streams of income. One of the things I've always strived to have is 7 forms of income. A few of them fail, and I've gotten up to the point where I've had 5 at one time, and now I'm basically down to what I would call like 1.5. A lot of those have been sold off. I'm in the process of finding new ones to replace it now, and here in California, most of it's just taxes go everywhere. So, they take a lot out of us here. But when you look at the red zone here, we have a lot of viewers of the channel that are in that red zone. Some of them may still be making some money. I think someone mentioned in here the never retire crowd. It seems like a lot of people planned and thought that they were going to retire at 60 or 62. And they get to that point and they're like, I can't do it. So it goes on to 65 to 67. Right. And you even have kind of in that red zone there, where you can even hit into potentially 75, even though your accumulation line is not still there. People may still be working a job, maybe not full time, but doing something to try to pay the bills. And
sure,
my hope with working with you on this is we can give people a handful of ideas and ways and resources to kind of think of ways to balance a portfolio out a little bit. If you're 100% in silver and gold, you're not going to have the cash flow. So you're going to be constantly selling things to get the cash flow. And that could be the best opportunity if silver goes up to $1,000 overnight, mysteriously. But the odds of that happening are very, very slim.
Pretty slim.
Going up to $100 over the next couple of years to maybe $300 is possible. But that's also taken into account, maybe having a national debt of like $45 to $50 trillion. So there'll be inflation in there too. So don't think if it's $300 that it's $300 today. It might be the same as $130 or $150 today. So you had a couple other cool charts I wanted to bring up here too.
Yeah, and I would just comment, we're talking about asset allocation, right? We can't have all of our money in one asset class. And I like the idea of diversifying between 7 or 8 different asset classes that are non-correlated as much as possible.
Yeah, let me pull that one up. Okay, here we go.
Yeah, so I thought about this and I'm thinking, what are the assets that we have that we can invest in? And I came up with 15 different asset classes. And then I've got subcategories, under each one, because like in real estate, I mean, you can invest in real estate a whole bunch of different ways. And so some people like doing tax liens. I mean, there's a good way to generate some cash flow that's in the real estate, sphere. If you're a fan of buying and selling real estate, you might think that's a great option.
Yep.
So I came up with these 15 asset classes, and what we want to do is take our cash flow, and we've got inflows, which is your income, you got outflows, which are your expenses, and then there's either going to be an overflow, meaning money that's left over that's going to overflow onto your balance sheet, or you're going to have a backflow, meaning you've got to go into debt or sell assets to take money and push it back up onto your cash flow statement because you didn't make enough money to cover all your expenses. So I like to think of it like that. We always want the money flowing, right? The velocity of money. We want the money moving so that it's growing and working for us. We don't want it to be stagnant and have it to be dead and not moving anymore. But I like these different asset classes. I think the number one asset that you should be investing in is yourself, right? Your set times your skill set times your tool set can equal assets. And we want assets that can produce income, especially in retirement. But all of us have been focused our whole life on accumulation, growing assets, really, which is speculation, right? We're buying low and we're hoping that the price goes up so that we can sell it and make a profit.
Yep.
And the problem with that thinking is it changes when you go into retirement. Because during the accumulation phase, we talk about dollar cost averaging. If something drops at 50% in price, we're good with that because that's the flashing blue light special at Kmart, right? We're buying those shares on sale. We love it. But as soon as you pull the trigger and you're not working anymore and you are in retirement, what you're doing is you're selling those shares. And when the market drops 50%, you've got to sell twice as many shares to generate the same amount of income. So that's not dollar cost averaging anymore. We call that dollar cost ravaging because it's going to destroy your portfolio, right? It's completely different. It's that 180 flip that we're just not prepared for because we spent our whole life taking a little bit of cash flow and turning it into assets, and now we got to flip it and take our assets and turn it into cash flow.
I agree with that. I mean, it's here. I got to put the right one in here. Just a second, guys. I'm going to put the other assets up here so you can show them real quick.
Yeah.
But I think it's important though. My growing up, my dad does a lot of real estate stuff, and let me bring these up.
And I love accumulation. And don't get me wrong, speculation, like buying low, I love it, right? We want to make money. It's just the emphasis changes when we get to retirement because now our focus has got to be on cash flow more than it's ever been from our assets.
I agree. So for whatever reason, I'm not a huge fan of StreamYard. They've got a lot of problems. I think I might start using something else soon. It won't let me go to all the other pages of this document. And I just created 3 versions of it and saved it in different form. Anyway, it won't work. So we'll have to figure out how to get this to you guys. But what I wanted to point out there is in real estate, for example, you can buy property, you can fix it up, and you can flip it and sell it.
Yep.
And
speculation, right? It's accumulation.
Now, if you do that in less than a year, you're going to be paying,
short-term capital gains tax,
capital gains income. If you can do it more than a year, you'll pay long-term, but you're paying a big amount in taxes. Okay. Now, if you're very savvy and you're doing a lot of these projects, you can do a 1031 exchange where you roll it into another project. However, a lot of people think they're going to do that, and then they get to the end of it and they run out of the time to find another good project because you don't just throw it into anything. You got to throw it into something else that's going to make you money and work. And oftentimes you end up paying that. The other alternative is you could be buying property, fixing it up, or building it from the ground up, and you hold it and you lease it out. And so, a couple areas of alternative real estate that I like to coach is like laundromats. And one thing that's cool about laundromats is you might get someone that's crazy enough to put a proof silver quarter in there, not knowing what they're doing. Right. And the thing goes in there, right?
Yeah.
You can get some pre-64, constitutional silver in there as well. And then you have the cash flow that comes off of, off of the business. And then that lets you hold on to silver or even accumulate more of it too.
Right.
So, you just have to look at those things. But at some time, coach, let's say I had a whole bunch of laundromats. I may not want to work those anymore. And so,
Right.
Some of the income that was coming off of that starts going to someone else that's running it. And I either have to have more of them or I'm going to have to find some other ways to produce that.
Mm-hmm.
All right. So any of you guys that have questions, do put them in caps as much as you can. That way we can get to those too as we go through this. So the other one I wanted to bring up here, you had, I don't know, we've got sequence of returns and top 13 financial risks. Which one would be best to hit next?
I don't know. Let's talk about the sequence of returns risk. I don't know if people really are aware of this. When we talk about average rates of return over a period of time, that's a deceptive number, especially when we're talking about a volatile asset like an equity portfolio, because the prices go up and down so much. There's so much volatility that over time you can show a positive rate of return but actually be losing money. Your balance is going down even though you're showing a positive rate of return. So this example bears that out. And what we're doing is we're showing, I've got John on the left who invests $500,000, and he's averaging 8.03% return over the time period there. But because he incurs losses early, he's going to wind up being completely out of money at age 83. Okay, he starts a withdrawal. He's pulling out 5%, and it's indexed. It's going up by inflation, I think 2% a year. But the drawdown, that's the dollar cost ravaging I was talking about, right? When the portfolio goes down, you got to sell way more shares to generate the same amount of cash flow. So over time, by age 83, he's out of money. Now, we want to flip this. And remember, he had a positive rate of return, 8.03%. But contrast that with Susan, same $500,000, same initial 5% withdrawal rate, $25,000, same annual returns, but we just flipped them. Okay? And she, at age 89, has pulled out $900,000, and she still has a balance of $1.6 million. Like, that's mind-bogglingly different. Like, that's not even in the same universe, right? But it's the same rate of return. 8.03%. It's because it's the way it's calculated. So we can't just look at what's my average rate of return anymore, because that can trick you. It'll be deceiving.
I agree. And the other thing you can look at too is you see this a lot with if you guys are on X a lot and other things like that. I see a lot of comparisons, like when you look at things like Bitcoin as being the only asset you should ever own. Get rid of your real estate, just own that. And borrow against it, and it's the best thing ever. And they look at these rate of returns as an example. And the funny thing is anything off of zero is going to have massive amounts of return if money gets into it. Mm-hmm. And so they start showing things like 500,000% return. Well, no one that's using the analogy or is sharing that quote did that. So it also doesn't apply to everybody. And then when you look at equities too, you've also got to look at what happens to the value, not just the return over time, to your point, because it can go up and down. And so if you think you're getting this great 8% return the whole time, but you're taking these massive hits on some of these time periods, and you're taking it out at that time, you're going to get completely clobbered.
Yeah, and that's why we talk about that retirement red zone. It's the 5 to 10 years before you retire and the 5 to 10 years after you retire. Because if you incur significant losses during that time frame, during that red zone, your accounts hit so badly that you can't recover. You don't have the time.
Yeah.
And man, nobody wants to run out of money before they run out of life. And given the fact that we are living longer, and especially if you are a higher income earner, like the higher your income, the greater your wealth, the greater your health, the greater your longevity. So I saw a stat the other day from a Harvard professor who was saying if you're a healthy 40-year-old male, you are in the top 1% income bracket, on average, you're going to live to 87 and a half. But if you're in the lowest 1% income level, you're going to live to 72.
There you
So
go.
your audience are going to be in the higher income earners, right? So they're going to have access to better healthcare, better lifestyles, better nutrition, all that kind of stuff. They're going to live longer. So we have to plan for longevity, because longevity is the number one financial risk in retirement.
Well, and if the medical advances come out and people live to be 110, 120,
Could you imagine? We're not planning for that financially. Like, how are
oh,
you going to fund that? How are you going to
so,
fund that?
well, there's the thing. I mean, Social Security can't do it by itself.
No.
So, everybody's going to be moving back in with their kids.
Yeah.
So there's a reason to have kids, is to have someone.
Nobody wants to do that, surfer.
Be nice. Be nice to your kids. No,
That's right.
But it is true. I mean, you have to look at these things, and unfortunately, I've had to drain my retirement several times. But it's okay. I'm a pretty resourceful guy. We have the things that are going on, and I'm someone that's not going to get devastated by that. But it does suck, because there would be a lot more wealth in these retirement accounts at this point. But it's okay. We'll figure it out. My key is, I don't want to be working until I'm 75. I don't want to be working until I'm 85. I don't want to work till the day I'm dead. And what I mean by that is, I don't want to work for an employer doing something that they're telling me to do and telling me where to go and all those different kinds of things. I will always be working. I will always have some kind of a side business where I'm hanging out on, YouTube, maybe either making videos or, in the chat with people and doing things like that. I will always be working on some kind of a side thing. I'm a busybody. Sitting on the couch just watching TV isn't going to do it for me.
No.
I mean, I think Silver Heist is in here, and he had said something about farmers. Yeah, right here. He said, farmers work until old age, comes in the field, sits in living room chair, and dies. There's worse ways to go. We're all designed to work hard, right? So this isn't about like trying to figure out how to break the game and not, make money out of nothing and just be able to sit there. I know people that retired at like 35 with tens of millions of dollars, and they started playing golf every day, and they had no meaning to their life, and they got depressed, and they had to go back and do something after about a year of golf, because it wasn't enough. Now, they must have not been good enough to get on the PGA. So I don't know what they were trying to do, but recreationally, it was boring. They probably had no one to golf with on several days out of the year. And, it just, I don't know. I like golf, but I don't know that I can play golf, 2 or 3 times all day long. And so for a lot of us, we're going to keep working. There's going to be things going on. But the idea is, if you see this blue line, that's where this is really important here. You don't want that blue line to end at 75.
No.
You don't want that blue line to end at 80 and you live to 85, because now you've got this big problem. And then the last thing I'll throw out is, at least in this country, in the United States, we don't traditionally go and live with our kids and have them take care of us when we're older. I would say a lot of people, especially those watching the channel for the most part, that have the means to stack gold and silver, but that might not be everybody in here, maybe looking at a retirement home or a rest home at some point. And you don't want to be putting that entire burden on your kids to support you to do that. You want to be able to take care of some of that. And if you can't, living with your family is not a bad idea either. It's just that a lot of people believe that's where they're going and that's what they're going to do. And they're not planned sufficiently for it. And when they get to it at the end of the day, it just doesn't work out right.
Yeah.
And then you're at home when your daughter or son's out working all day long. And then, you just don't have anybody to be with. So
I'm all about, because we're talking about gold and silver here, and I like the idea of having a good portion of your investable assets in gold and silver right now. I think that we're going to be looking at some strong markets over the next, 5, 6, 8 years. But what happens after the bull run, Surfer? Like, that's when we maybe need to be looking at asset reallocation or a rebalancing of our portfolio. And maybe then it's a good time to be selling some of that, not all of it, but sell some of it. Because if you look at history, every time there's a big bull run, there's a big pullback, right?
There is. And so, with stackers, with anything, I don't recommend selling everything.
Right.
When you get to a point where it's kind of, topped off, right? None of us are going to time the bottom. and the top
Or the
perfectly.
top.
If you
No.
did, you got really lucky.
Right.
And don't get cocky and think that you're going to pull it off the next time, because that's how you're going to give it all back to the market.
Right.
There's going to be a day where gold and silver. So gold and silver is just starting into a bull run. My guess is it's going to take us into 2028 to 2032. Somewhere in that range is going to be this next big gold bull run. A lot of people smarter than me that have been in the industry a lot longer, or at least they've been in longer. I don't know if they're smarter than me. I'm just kidding.
Yeah.
But
Probably not.
they talk about this idea of this gold run being even bigger than the one in the 70s that we had. Okay, late 70s into the early 80s. And if that's the case, then you're looking at over 1,800% return on gold. And a lot of them will look at it at about the $1,000 to $1,500 range is where the bull run starts. Okay, so if it goes up 1,800% or 2,000%, that's a great upswing, right?
Yeah.
What happens to what you're saying too, John, is when those runs go up, it always way outpaces inflation. Okay, the gold and silver go way higher than inflation, and really their median is more of kind of keeping them with an inflation amount. And so there'll be a time where if you guys want to increase your wealth, you can move out of some of your gold and silver to things like real estate. Okay, so if you really like to hold it physically, real estate. If you're younger, you may go into some of the crypto stuff, but we'll see what happens with it by that time. You may go back into the stock market, depending on what's happened to the U.S. dollar and the fiat system. If we've had like a big major financial collapse in the stock market, there could be a great time to buy back in. When people are fearful, that's usually the time that is close to a bottom to buy. And when people are euphoric, like I'm never getting rid of my silver, I'm just going to keep buy. You've got that. And the saying goes, if your shoe shiner or your grocery bagger, or pretty soon your Tesla robot at the grocery store bagging your groceries, it starts to give you tips on the stock market, or asks if you're buying crypto or buying gold and silver, those things are probably getting close to the top. Or if your aunt or your grandma, is saying something. A lot of us don't have grandmas anymore. I don't have a grandma around anymore, but maybe your mom's asking. Those are tops. And so there will be a time where people can take advantage of selling and going in. For me, for example, I have constitutional silver like quarters, maybe not this proof one, but like quarters that I won't ever sell because it's like my emergency survival fund of money.
Gotcha.
So to me, that stays there. And then I have a minimum amount of gold that's kind of wealth insurance in case like I had a major earthquake and my house is destroyed and I only get a fraction of it back. But I do have like collectible gold coins. I've got a lot of silver bars and other forms of collectible silver that those, as it goes up, I do plan on selling some of that. And I know that's different than people like Yankee Stacking, where he says he'll never sell anything. It's all passing. But you also have to look at it. Yankee will tell you he's only 20% of his portfolio into gold and silver. The rest of it's in other things.
Right. And that's what I was going to say, because it depends on how much money you've got, how many assets you have, right? I mean, the objective is you got to create enough cash flow. And if you've got $1 million and you follow the Wall Street 4% rule, that's only going to pay you $40,000 in the first year. Well, and Morningstar says that's too high. They said this year should be 3.7%. So now you got $1 million, you're only going to get a $37,000 a year income. That goes up by 2 or 3% a year, and maybe it'll last 30 years. Well, that is horribly inefficient use of $1 million asset to only yield that much kind of cash flow, right? So we got to have some different options.
You do. And so it all depends on what your percentage of your net worth as well as your investable income, because you want to, with your investable income, you take your personal residence out of there.
Yeah.
A lot of you guys are including personal residence and net worth. I would take the personal residence out of everything when you're trying to figure out your calculations of living, unless you plan on selling your house and living with someone else. You're still going to need a place to live, right? But looking at that, depending on how deep your allocation is or how strong it is in precious metals, you may sell some of those at the top and go down. The trend is they will continue to keep going up. Okay, so I don't know that we're ever going to get back. I can't see a way that we get back to $5 silver, and I don't see a way that we get back to $300 gold. Okay, I just don't see that. And we're most likely heading to $10,000 to $12,000 gold, and we're most likely heading to about $300 to $500 silver, maybe even $1,000 depending on the ratio. And also keep in mind, you can have a really low gold to silver ratio, and gold falls and silver goes up. So it's not always everything goes up together. But
Right.
With that said, it depends on your personal thing. And so, one thing I want to do is, John, and I think I've got it in the bottom. We should have all of your information. You guys can reach out to the financial coach and ask for, some help, some support. He offers services. He can give you some advice on, what you might want to do. A lot of you probably have an advisor or maybe a planner. I would talk to them and figure out, where does the silver and gold fit into, your overall plan, right? Like this.
Yeah.
And start to get a better understanding of where you're at. John, what I'm going to do is I'm going to start running the giveaways here. I think we hit over 50.
Okay.
So we're going to do both of these. Okay.
Awesome.
We'll do 2 giveaways. Now, guys, sometimes the giveaways take me a week or 2 to get out because this is a side thing I do. I'm a director at a software company and a dad, and I get really busy.
And a husband.
And a husband. And you guys would be so surprised how much a YouTube channel takes to
oh my gosh, right? I know. It's so many hours.
And only the big guys that are in the hundreds of thousands of subscribers are making money. The rest of us pretty much are, we're doing this for free for the most part. So here's what I want to do, John. I'm going to put up a question for you here, and then I'm going to pull up our screen so that we can see our
faces more. Torture for.
It's going to be this picker deal here. So watch this. Okay. Where'd it go? Right here. I think that's it. Did I add it to stage? Maybe. Oh, you know what? I got to take this down. Use tools. Okay. So there's that, guys. Here is what you need to put into the comment section, and we're going to run it twice for gauze. So you guys all like silver. Just don't tell my wife. She can't believe I keep giving silver away. But hey, if we can grow the channel a little bit, this is why we don't make a lot. We make a few bucks off advertising. We give it away in silver. All right. So you guys see that? Go ahead and put that in. We'll let it run here. And I'll have you, let's see if we can, we've got 3 people in right now. Okay, we got over 110 people watching and 3 people that want silver. That's surprising. Let's see what happens. All right, so I guess this is for me. Hey, Silver Surfer, I'm 56 years old and I'm a musician, and I do shows and write songs all the time. Plus, we have band practice twice a week. So I found my stay busy niche. You rock. Awesome. I love it.
Awesome.
Okay. So I guess that wasn't a question, but more of an accolade. Thank you. There's so much, you guys, that we can do here that can help you as well. So, if you are in retirement and you're feeling like, hey, I don't know what to do, I don't have a financial advisor, I would definitely reach out to John and at least have an initial conversation with him to see if he can help you and put you in the, get you in the right direction going. Yeah. The other thing I would do too is if you have a hobby and something that you like that you might be able to turn into some extra cash flow for you, I'd never turn you away from doing something like that. A lot of people will start a YouTube channel like this one around gold and silver stacking, and they'll get to know a lot of people. I haven't made much off of this in the 2.5 years I've done it that I haven't put back into the channel, and that's my choice to grow my channel and put it back in. But what I have done is I've met a lot of great people to the point where often I'm able to buy gold and silver, anywhere from spot to 4% behind spot. And nice. That right there is not making money, but it's saving money by getting a better price when you buy it.
Right.
Okay. Yeah. So we're up to 16.
Hey, and I like that last guy's comment about being a musician, and he's doing gigs, so he's getting paid active income for working. But what I liked even more is that he's writing songs all the time. So that's royalty income potentially, right? That's ongoing cash flow. If his song is popular, they can keep getting paid on after doing it one time.
Exactly. So for you in the questions here, to be eligible for the giveaway, all you have to do is hit the subscribe button. Okay, I do check that later. And then all you have to do is copy someone's here or rewrite it, it's hashtag silver retire. Okay. And then we'll give you guys just a minute here. We're going to get to 20 and then I guess we'll spin it. But now if you're watching on TV, because a lot of you guys watch this on TV, all you have to do is pull out your cell phone, go type in Stacking Surfer in the little, magnifying glass, and you can pull up this live stream, just mute it so it doesn't annoy you. And that's an easier way to type than trying to do it on a remote, which is like insane to do. Right. That's another way for you guys to like it. It's a way for you to subscribe, and it's a way for you to enter the giveaways. All right, so we're going to go ahead and get started here. This is the first one we're doing the giveaway for. I don't know anything about this thing, and I will double check it. If it's not silver, I'll send you something else. We'll send a quarter or something, but I'm pretty sure this is silver. And I think I got this off of Whatnot, off of some quick little auction thing, but it is not marked. So I don't know where it comes from. So it is one of a kind and unique. We're just going to call it the silver square. So skull. Okay, so we're going to go ahead and draw this. All right, let's see what we got here. Oh my goodness. I told you, this guy just goes around and he gets silver all over the place.
For free, all over the place.
No, he's got some magical thing. So he won't tell us how many ounces he's gotten, but he's getting lots of coins. All right, let's run it again. So this one's going to be for the quarter. Here we go. So it's really shiny, guys. Like you could probably
that is very shiny.
You could probably use this for like an emergency, like mirror, signal mirror or something. I don't know. All right. So here we go with the quarter. So we're going to redraw. All right. So you do have to be subscribed. So if you win, hurry and go subscribe. Okay. That's like a hint here. And then the other thing I would recommend, guys, too, is
Eskimo.
Send me an email today. So Eskimo, send me an email today, stackingsurfer@gmail.com. Put in the title that you won the quarter GA. That will help me remember to give that to you. And I need your mailing address, including your name, as well as your YouTube handle. And if you're not comfortable sharing your name, but your YouTube handle will make it to your house, then you could use that. And that's all. You got to just send that in, and then we'll get this out to you. And then the last thing I'll just share with you guys, I do have some other great videos coming out here real soon. I'm actually going to film a couple in a few minutes. And then I've got one with John Eric from Las Vegas that does these really cool, Johnny does these really cool, like out of aluminum boxes for cash and coins. And, they're set up in a way that you can put them in a safe, or you can even use them without a safe and put them somewhere. And because the aluminum dissipates heat so well, as long as it's not sitting in a massive, forest fire, at least when he's tested it, it's done pretty well in fire. So, it's another way to store things and take care of it. But and he's a fun dude. He actually has coasters he's created that are 24 karat gold, gilted, sitting on the Oval Office, in the Oval Office on the coffee table.
Oh, cool.
So, and it's got the presidential seal, which is pretty cool.
Yeah, that's awesome.
Anyway, they're gold. It's not copper, but he's coming on. And then I've got Tangible Investments that will be coming on here soon. We're going to meet the co-founder of PCGS. And then outside of that, there's another interview with Eric Young from, I think he's out of Hong Kong. He goes by King Kong. I think it's 866. No, it's not 866. I think it's 8999. Anyway, I have to go look at it, look at his number again on there. But I interviewed him early this morning, and I've got to edit that because I think I look like a zombie. But anyway, great stuff coming out. Hit the subscribe, the bell icon, so you don't miss anything. And Coach, I want to thank you for coming on. And
thank you. Yeah, I love being here. Thanks. Great conversation.
Thank you, everybody.